This is Earnings Preview, a look at companies reporting during the week, along with companies which may have positive or negative earnings surprises. This earnings preview is for the week of June the 1st through the 5th. Boy, it's hard to believe that June is already here, midway through the year. Charles Rotblatt, our senior market analyst at Zacks.com, here with me once again to kind of shed some light on what's coming up, what we can look forward to. Not much, you tell us.
From an earnings standpoint, there isn't much. We have fewer than 75 companies reporting. Just one member of the S&P 500, CIEN, they're expected to lose 15 cents or have lost 15 cents last quarter. That's what they're scheduled to report. Otherwise, we're talking, pretty much smaller cap companies coming out right now. This is typical. We're between earnings season. It's early June, so we're going to see a light earnings calendar. I do expect volume to be light. Volume has been trending down. For the second consecutive month, the S&P Spiders, SPY, that has actually dropped in average daily volume. From March, it dropped to April, and again, it's dropped to May. So we're kind of light volume, and a lot of people are waiting for catalysts as the S&P and the Dow are both really fluctuating between their 200-day and their 50-day moving average, kind of a no man's land.
Well, new worries do seem to be weighing on investors' minds, however. You've got rising interest rates, you've got a weaker dollar, you've got rising commodity prices, including oil prices. A lot of people out there thinking that this could crush some of those green shoots of recovery.
Well, it's certainly a concern, and when you look at bond prices in particular, the worry is what's that going to do to the housing data. We will actually get pending home sales out this week, but really we won't see how it's impacted housing sales till later in June. We'll have to see what the numbers say, but it did result in a big increase in mortgage rates, and so then you run into the question, when you look at the data even for May, how many people locked in their mortgage rates before we had this huge jump this week. Certainly everyone's looking at bond prices. It's kind of interesting, though, because it's not like we didn't know Obama was spending billions of dollars. It's not like we didn't know the size of the stimulus package,
Right.
All the money being spent on TARP, the money now being invested in GM. So it's kind of, when you're looking at some of the explanations for the rise in bond prices, it really makes one scratch his head and say, well, why now? But we do know sooner or later it's going to occur. Treasury prices are going to increase in value. I personally hold PST, which is an ETF that shorts the long bond. Anybody watching right now who's not expecting bond prices to be significantly higher in the future really needs to take a step back and look at the data. When you look at interest rates and you look at inflation, it's not a question of whether or not either will be higher in the future. It's more of a question of when will they be higher in the future.
So which one concerns you more, inflation or deflation?
Well, I think the deflation battle has pretty much been won. It looks like the worst case scenario for the markets and the economy has been avoided. That said, it's important for people to understand that the U.S. economy is one shock away from reversing course and getting far worse. Obviously, when you look at the events from North Korea and all the saber rattling they're doing, and obviously the missile tests, that's a concern. But a lot of times the shocks we see hitting the economy aren't things that we expect. So we'll have to watch and see how things play out. But right now, it looks like the economic data is definitely showing a slower pace of decline, and that's a positive.
What about Q2 as far as earnings are concerned? Do you think it's going to look pretty much the same as Q1 did?
Yeah, more or less, maybe a little bit better, but it's still going to be a very tough environment for earnings in terms of companies. The U.S. economy is still contracting. We should see improved GDP in the second quarter versus the first quarter. Still see contraction, and that's going to weigh on companies. It's interesting, when we look at the retailers, a lot of companies said that even though earnings were better than their forecast, they described conditions as being challenging. As we record this on Friday, May 28th, the day before, Dell came out and said they're not seeing a recovery in the PC sector, and that was Dell reporting on Thursday, May 27th. So a big computer company, refuting some of the comments of Intel and IBM that things in the tech sector are looking better.
Right.
So it's definitely still a very tough environment for a lot of companies.
And as if that weren't enough, we have General Motors now trading under $1. And so the question is still remaining, what are the officials of the stock market going to do with General Motors as a Dow component? Because typically that's when it's on its way to delisting, right?
Right, and the answer is we don't know. It's a small group of people that decide what actually goes in a Dow Jones Industrial Average. For people unfamiliar with the process, it's actually a bunch of editors at Dow Jones, not a bunch, really a small group of editors that actually handpick what stocks are going to be in the Dow Jones Industrial Average. It's not like the S&P or the NASDAQ where it's a large index. This is really a small group of people deciding, and the changes are made every few years or several years. So when we look at GM, it's questionable as to what's going to happen. They have not said anything yet. One of the filings made by GM a few weeks ago called for a 100-to-1 split, which obviously would send the stock price up, and that could have an impact on whether or not it stays in the Dow. But to answer your question right now is we don't know. I don't know exactly if General Motors has a reverse split, how that's going to actually impact the average either. We'll have to wait and see, and hopefully we'll know something next week. The current scuttlebutt is that the Obama administration is going to bring General Motors into bankruptcy court on June 1st, which would be Monday. But this is an evolving situation, so we'll have to see exactly how it plays out. And I should emphasize that a deal is never done until it's done.
Well, crack the whip on those editors. Would
I'll
you
work
please?
on it.
Tell them that we need to know and we need to know now. And if you want to check out the economic news that's on the docket for this most current week, as well as at least one stock that could surprise to the upside and one that could surprise to the downside, then what you need to do is get over to Zacks.com's homepage and look for the earnings preview headline right next to Charles' picture, new picture I might add, and pretty snappy dresser if I do say so, and click on it and it'll take you to all of that information. With Charles Rotblut, I'm Terry Ruffalo.